Aloha and happy holidays to everyone out there. I hope you're doing well as we close out a very interesting 2020. I'm Evan Leong from Brain Gain Hawaii, and welcome to the 18th Save Hawaii Jobs and Businesses PPP webinar for December 23, 2020. We decided to do today's webinar in such short notice because of the recently announced PPP2 in the new stimulus bill. Please let me introduce our team for today. Darren Leong is from the law office of Darren R. Leong, and he's a specialist in employment law. Stacy Katakura is the CEO of Accumulus, which is an outsourced CFO and accounting firm. Jeff Harris is a senior name partner at the Torkelson Law Firm. Buddy Leong is the executive director of Virtual Student Experiences and handles our communications backend and chat box. Koko Leong is the chief marketing officer for Virtual Student Experiences and is in charge of content, video editing, and the YouTube channel and podcast. Beckett Wren is the head of communications for Virtual Student Experiences and is handling the show notes. Questions will be taken during this webinar through the Q&A module only. If you post it in the chat box, it will not be answered. You can upvote questions in the Q&A module, and we will do our best in the latter part of the webinar to answer them live. Disclaimer for today, this information is provided for informational purposes only and is not intended as legal or tax advice. Please consult your attorney or accountant to discuss your particular business situation. SBA's participation in this presentation is not an endorsement of the views, opinions, products, or services of any of the participants, persons, or entities. All SBA programs and services are extended to the public on a non-discriminatory basis. This information is current as of today, December 23, 2020. Let's get started with Darren Leong. Thank you and happy holidays.
Hello, everyone. Happy holidays. Just to sort of reiterate Evan's point, this webinar is our 18th, but it is going to be very similar to our first, which is that the text of the new stimulus bill just came out a couple of days ago. It hasn't even passed into law yet. We don't have any rules from SBA. We don't have any rules from Treasury. And we're going off essentially reading a statute that is a little bit thick. It's buried in a 5,500 page document and refers to changes and inserting and deleting from it a prior statute. So that's a very long way of saying this is what we could glean from the statute so far, but we thought it's important enough because I think many of you who are on this call got a first PPP and are waiting for the second to arrive. And this bill is the second. It's what's called a second draw Paycheck Protection Program loan. And we thought we would do this really timely because the amount that's allocated to the second draw, and for some businesses, a first draw PPP loan is $284 billion. It's significantly less than what was appropriated the last time. However, the eligible recipients this time are narrower. The bigger recipients that took the $10 million loans and such are going to be excluded this time around. So on balance, we don't really know whether there's going to be too much money, enough money, or not enough money. And just in the precaution that it's not enough money, we want as many of you as possible to be ready and prepared so that when it goes live, and hopefully it won't be like the first time it went live in the first round, if you remember back in April, hopefully it will be smoother, but we want you to be able to get your applications in at the earliest possible moment, just in the event that there might not be enough money. So let's go over some of the changes and the new PPP. And we'll talk about some other aspects of the law as well. And then we'll take some questions. I'd also note that it's still a bill. It's not actually law yet. So both chambers of Congress, the House and the Senate, passed what has been labeled as the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. We'll just call it the new stimulus. The president has not signed it. And the news is reporting today that the president is demanding amendments to the law. And the most prevalent one is he's demanding that the individual checks of $600 be increased to $2,000 and $4,000 for couples, which has caused quite a stir within both chambers of Congress. So it's unclear when this will ultimately pass. We do think that it is, as far as the Paycheck Protection Program is concerned, that piece, that it should remain relatively unchanged once the president signs. But we're going to have to wait for the president's signature before this becomes law and before banks can start issuing second draw PPP loans. Okay. So some of the aspects and changes. Eligibility for second draw PPP loans. The major pieces of this are that the 500 employee maximum went down to 300. I think for most of you on this webinar, that will be fine, but you should know that the 500 employee threshold has been drawn down to 300 employees. There also appear to be changes with respect to the affiliation rules and what we think is a waiver of the affiliation rules, but I don't speak confidently enough at this point on that, other than to say if you are an entity that had issues with affiliation rules the first time around, that should be followed. That should be followed up on. The additional revenue decline requirement, which has been widely talked about, is a decline of 25% or more of gross receipts quarter over previous quarter year. So what that means in practice is January, February, March of 2020 gets compared to January, February, March of 2019. And then the same thing for the second quarter, and the same thing for the third quarter. And then once we've completed the fourth quarter and we're into the next year, it's the same thing for the fourth quarter. So essentially, you would get 4 chances to qualify. If revenue dropped, if revenue was $100 in the first quarter of 2019, and it was $74 in the first quarter of 2020, this is gross revenue, not net revenue, then your business will qualify. So if in any of those quarters you had that revenue drop, that would meet that requirement. For businesses that were not in business all the way through 2019, so businesses that started in 2019 or started in 2020 before, I believe it's February 15th, those revenue decline rules are modified a bit. And I won't go over that here, but just know that there are specific rules depending on if your business was not in operation for the first 2 quarters of 2019 and started after that, or if it started in the latter part of 2019, or if it started in January of 2020. There's different rules regarding this 25% gross receipts decline. There are additional entities that have been added to qualify for PPP. Those are housing cooperatives, news organizations or certain news organizations, destination marketing companies, and probably the big one for Hawaii, other than the housing cooperatives, is 501c6 nonprofits, so membership organizations. Lobbying organizations, though, are excluded. So regardless of whether they are a 501c6 or otherwise, lobbying organizations are not eligible. And then there's also a provision making entities that are owned or controlled by Chinese entities or that have Chinese nationals sitting on the board, they also are not eligible. I don't make the laws, I just report them. Loan amount. So loan amount is the same in terms of 2.5 times payroll costs, monthly payroll costs. So it's 2.5 months of payroll costs. So same as last time, with some adjustments, you can determine that 2.5 months either from 1 year prior to the loan or 2019. So you actually, those numbers are probably going to differ somewhat in terms of what your higher payroll cost number is. And so you would use the higher amount of 1 year prior to the loan or 2019. And the maximum is no longer 10 million for second draw loans. It's now 2 million. For entities like restaurants and hotels, which fall under NAICS code 72, they can do a maximum of 3.5 times average monthly payroll costs. However, they're also still capped at that $2 million. So 3.5 times average monthly payroll costs up to 2 million for NAICS 72 entities. There's also a change in the covered period. So previously you could choose 8 or 24 weeks, either or, and now you can choose anything in between. So your covered period is what you elect anywhere between 8 weeks and 24 weeks. And this is where the flashback discussion comes back in, which is, we've been talking on and on and on about the two ways in which your forgiveness can get reduced, which is the FTE, full-time equivalent reductions, and also individual salary pay reductions. Those are going to still exist, but how they exist is going to be needed to be clarified by SBA. And the reason is because there are no dates in this statute. And as far as something like an FTE reduction, the dates are everything. So, what reference period are you using versus how many FTEs you had in your covered period? And then there's exceptions as to if you restore FTEs by whatever date. So that date is unknown for these second draw loans. So at this point, just know that those potential reductions for FTEs that you then need to find an exception to get away from, that contortion still exists. The bright side of that on the other end of the tunnel, however, is that for those of you with loans under $150,000 in the second draw, the forgiveness application is limited by statute. So the statute actually says that it's a maximum of a one-page certification. And the only things that are allowed to be on this certification are to list the number of employees that the recipient was able to retain because of the PPP loan, the estimated amount spent on payroll costs, total loan value, and then to attest that you provided an accurate certification, that you were complying with the use of funds requirements, and that you will keep the records for the appropriate amount of time. So the oversight and auditing into whether you qualify for an exception from the FTE reduction and that huge worksheet that you may have filled out at one point or looked at, if you are under $150,000 on the loan, that all goes away, and it's just this one-page form. So that's a very positive piece of this. There have been some updates to payroll costs and non-payroll costs. So if you will recall, the requirement is to use at least 60% of the money. Go ahead.
Darren, before we leave those reductions, remember the first time around we were comparing to when businesses were open. This time they're leaving it to SBA to say what you're going to compare it to. And if you compare it to the full-time employees you have at the start of the loan and the end of the loan, that's going to maybe an easier comparison anyway. That's the only thing I had there.
So hopefully the SBA makes it an easy requirement, but we're going to have to see what they do. For payroll costs and non-payroll costs, and this applies also to the first draw loans. So if you have a PPP loan that has not been forgiven yet, these changes to payroll costs, non-payroll costs apply to both that one and to what will be the second draw PPP loans. So on payroll costs, it's been clarified what we thought before, which is vision and dental insurance are included in payroll costs. But what's added and what we did not believe was included the first time is group life and disability insurance. So there's a little extra tack on to payroll costs to help you to get to that 60%. On the non-payroll cost side, they've made it, I think, much easier to make sure that you can get up that 40% of non-payroll costs, or up to 40%. So they've added four main additional categories. So the first is covered operations expenditures, which is payment for things like business software or cloud computing services that facilitate the business operations, or for products or services that facilitate operations, product or service delivery, processing, payment, or tracking of payroll expenses, human resources, sales and billing functions, or accounting or tracking of supplies, inventory, records, and expenses. So a lot packed into there. I'm pretty sure that there's going to be SBA rules that come out and talk about this, but that is one category. The next one is one that Stacy, Jeff, and I discussed, which we think is very broad, which is covered supplier costs. So it's any expenditure made to a supplier of goods for goods that are essential to the operations of the entity at the time that the expenditure is made, and that they're made pursuant to a contract order or purchase order in effect at any time before the covered period with respect to the applicable loan, or for perishable goods in effect before or at any time during the covered period for the applicable loan. The key part here to unpack is basically it's goods from a supplier that are essential to the operations of the entity. That seems rather broad despite all the other language there. The next is
Darren.
Go ahead.
Darren, this is one of those points where the F&B operations got a nod. Okay, your raw food, they specifically refer to the raw food here, the perishables that you use to prepare your meals. This is one place, and other places where they gave you 3.5. Have we gotten to that yet? The 3.5 months of yeah.
So I mean, I think for the F&B operations, basically it sounds to me like almost everything on your P&L statement will be almost everything will be eligible. So your cost of goods, right? That all your food costs. Then when you go down to your operating expenses, your POS system, your HR costs, payroll costs, all that stuff looks to be eligible.
Yeah, we think it should be fairly easy for virtually all businesses to hit the 40% non-payroll costs with these changes. Because if you recall before, it was rent, utilities are the main one. Rent is a very big number, and plus you have control over your covered period. So if you take a longer covered period, it's not just 8 weeks, it's now, up to 24 weeks, you really hit that threshold pretty quickly or easily. But in the event that you need to rely on these other non-payroll cost expenditures, the third category is covered worker protection expenditures. And that's things like fixing, the air vent filtration systems, that's drive-through window facilities, physical barriers, all that plexiglass that everyone has bought for sneeze guards, expansion of indoor or outdoor space. Restaurants have been doing that. On-site or off-site screening capability, PPE, personal protective equipment such as respirators, masks, etc., and those types of things. And there's even a catch-all here for other assets relating to the compliance with government requirements. So that's the third category. And then the fourth category, hopefully no one has had to have an expenditure for, which is covered property damage costs, which I'll just summarize as riot damage, or maybe I shouldn't use that word, protest damage. So I don't think we had much of that here, but that's definitely directed at New York, LA, Chicago, etc. Okay, a couple just small pieces, idle advances that were supposed to be subtracted from PPP forgiveness. They've reversed course on that, and that's not being subtracted. So the idle advance, which they're now calling a grant, that's up to $10,000. That does not need to be subtracted from PPP forgiveness. And then something that Jeff will cover that is quite detailed is there's a very big piece of this that's devoted to live venue operators or venue operators. It's called the Shuttered Venue Operator Grants. And if you get one of those, which have very expansive terms and substantial grant amounts potentially, you can't also get a PPP. So it's one or the other for the second draw PPP or for a shuttered venue operator grant. And then I'll leave the taxation piece to Stacy because that's also been a favorable change. So the last piece from me is the changes to idle. They've added some money in here, but what they're trying to do is target it toward low-income communities. So the eligibility, they've added more money, $20 billion for idle advances or idle grants, but it's only businesses in low-income communities. The max amount remains at 10 grand, but the eligibility requirements are more stringent. So max of 300 employees, and also economic loss greater than 30% during the 8-week period between March 2nd and December 31st, 2021, or during an 8-week period in that time frame. And that gets compared to the 8-week period immediately before March 2nd or an 8-week period in 2019. So it's a 30% economic loss with specific date frames, and then also it's for low-income communities. And if you go on it's low-income communities as defined by a specific statute. And so there are some maps that map it out for Hawaii, and certain areas will qualify. If you look at the map, it's kind of on Oahu, it's that Makaha Nanakuli area and some Waianae. There's some small spots in Honolulu, but large swaths will not qualify. So With that, I will hand it over to Jeff to talk about these shuttered venue operator grants, and then Stacy to discuss some of the tax pieces, and then we'll try to answer some questions. Thanks. Go ahead, Jeff.
Thanks, Darren. I think just about any shuttered venue operator in Hawaii likely qualifies for the first eligibility requirement, and that's that your revenue went down 25%. There are exceptions from the people that are eligible if you're part of an organization that is a public organization, operates in more than one country, operates in more than 10 states or territories, receives more than 10% federal funding, or employs more than 500 people. But absent that, if your company or an organization that you serve or enjoy is a venue operator, a promoter, or a theatrical producer, an independent movie theater operator, a museum operator, or a talent representative, SBA is authorized under the statute to issue a pretty substantial grant equal to at least 45% of your average monthly revenue earned each month in 2016, multiplied by 6 and perhaps more. If you, as Darren previously mentioned, if you've taken you can't take a PPP contemporaneously with this grant, but you may be able, if one of these organizations took a first PPP, they may be able to take this instead of the second amount. That's really, and the other point I'd make about the shuttered venue grants is none of the payroll or non-payroll cost rules apply to it. It's a entirely different sort of relief that just relies on the drop in revenue. It doesn't appear to go through the banks. It appears to go straight to SBA. We'll just have to wait for some rules on that. Before Stacy gets to taxation, I wanted to make a suggestion, and that's that those of you that think you have a 25% revenue drop and have 300 employees, I suggest you put the details together and get ready for the application. Compare your quarters, compare your Q1, Q2, Q3, Q4 for 2019 and 2020. Make sure that you have at least one of those quarters where you have a 25% revenue drop. Get your payroll evidence of your, and how do you prove revenue? Well, in any sort of reliable method, your profit and loss statement, if nothing else, just your cash flow statement. It's going to be, that will be clarified in further guidance from SBA. And then get that to the banker that you worked on with the first loan. Let them know that you want to get in line for the second loan, and don't wait, because there is less involved. And as Darren said, it's likely that this part of the statute's going to pass. Stacy, on taxes?
Sure. And just before I move on to taxes, kind of to add on to what you just said, and there's a question in the chat about how to prove revenue drop. I do think right now you would just want to look at your P&L statements, because I can't think of any type of tax returns that are filed that show your revenue that's filed on a quarterly basis, unless you happen to be a TET quarterly filer. But I'm not sure exactly what the SBA is going to need for to demonstrate the revenue drop other than your P&L statements or potentially your bank statements. So I did. So for the tax updates, there's not a whole lot. I think there's some good news with the new legislation. So the forgiven PPP loans are still not considered gross income for tax purposes. That remained the same. And there has been a lot of confusion after the IRS released their notice that the expenses covered by the PPP loans are not deductible. So this bill fixed that. The expenses from the initial PPP loans are deductible if forgiveness has not occurred yet. So if you had been waiting to submit your forgiveness application, or you're waiting and it hasn't been approved yet, your expenses from the initial PPP loans will be deductible, as well as expenses from the second draw PPP loans. They will also be deductible. I think that's about it. There's not a whole lot other than that. And I know, Jeff, we talked about the changes to the FFCRA. You might want to talk about that a little, because I'm not completely clear of how what's changed there.
Okay, Stacy, just 2 points there. First of all, the FFCRA mandate on sick leave, paid sick leave, and paid parental leave has not been extended. Those mandates end at the end of this year. But what this bill does is it says that you can take the tax credits for the payments you made for those leaves in the first quarterly return for 2021.
So
that's
you would take the tax credits through your 941 filing, right?
Yes. Yes. Yeah, that's really the only significant change there.
Okay, so we're going to do what we normally do, which is take these questions, the ones that are voted up the most. We'll take them in order. I will caveat this, that our familiarity with this new statute is like webinar number 1. So we probably will be answering some of these questions, because I haven't read them all, by consensus, and our success rate will be lower in terms of us saying we can answer it. Tell you ahead of time, it's going to be lower than it normally is. Okay, idle advances will not be retracted for first rounds or just the second round loans. And I'm going to check with Jeff on this. So a number of the provisions in the statute have a paragraph at the end that makes it clear that's retroactive. And I just don't remember off the top of my head whether that particular section does. Do you have the statute? You have it in front of you, yeah, Jeff? Okay, so I assume, yeah.
I did not see that retroactivity provision, but when I read the actual statutory language that talks about it not being subtracted, I simply assumed that they were talking about both, especially for people that haven't applied for forgiveness.
Yeah.
I'd at least try that. Okay. Again, throughout the statute, there are 3 things that they say after each of the 80 pages worth of sections. They either say this applies back to this should be incorporated in the March 2020 bill, or this applies to people that haven't obtained forgiveness, or this applies just going forward. And they didn't say any of these things there. They just said that there's really a gloss there. The EIDL advance is not subtracted from PPP forgiveness, but it can't be used for it can't be based on the same wages. And so that's a little bit different, but it's not going to be automatically subtracted.
Yep. Okay. Next question. I am a single member / sole proprietor, just myself as employee. I have held off from applying for forgiveness to see how things shake out on legislation. What is your advice on when I should apply with all the news with PPP? Should I wait until the new stimulus is officially signed? Any advice? Greatly appreciate it. So on your first loan, if it's just you, sole proprietor, and so the issue with being able to take the deduction for expenses doesn't apply because it's just you. You're not deducting, you know, other employees or rent. Then it probably does not matter if you have the ability to take the whole thing. And the smaller loans, which would include a sole proprietor, because the maximum is 20,833, there already is a one-page form for those for first round PVPs. So I don't think there's likely any reason to wait in that particular circumstance.
But if if your loans are greater than 50 and below 150, yeah, I think that it might be a good idea to wait until the law is passed.
Yep. Okay. Will there be a new forgiveness application for the first round of PPP loans with all this new information? So I think the answer is like for larger loans, the answer is likely yes. So we're not talking about that one pager, but for larger loans, the answer is likely yes, because what they will need to do is then include the broader definitions of non-payroll costs, the broader definition of payroll costs, et cetera, and the other aspects of the law that have been applied retroactively. So there probably will be. And to Jeff's point, for those businesses, there should be no downside in waiting a little bit, because you have, 10 months? So, you know, letting it shake out a little bit, letting them fix the applications, make them easier, that probably makes sense, rather than rushing to forgiveness on your first PPP loan. You guys agree with that?
Yeah,
yes.
I would agree. Mm-hmm.
And the other point, especially for the people that are, even the people that are able to use the simplified application, there's no reason to rush that either.
Yep. Okay, next question I think is duplicative, but Stacy, if you have anything to add to it, which is our expenses paid with PPP round 1 going to be allowed as deductible on tax returns?
So the answer, yeah, the answer would be yes, as long as you haven't received forgiveness yet.
Yeah. Yep. I agree. How do the new requirements apply to 501c3 nonprofits? Has anything changed? And how do they demonstrate revenue decline? So 501c3s were included the first time around. They're still included the second time around. The things that are changed are what we described sort of throughout the webinar, which is just the changes to the law period, but not specifically for 501c3s.
So for 501c3s, I think what you might want to think about is if you've had any events or programs that were canceled or postponed because of the various orders in place or just social distancing measures, you might want to look at what quarter that occurred last year versus the quarter that occurred this year. And then that's going to probably be the likely the quarter that has the most revenue loss, I would think.
The law does specifically refer to this, and they explain that the revenue is synonymous with receipts. So, for example, a charitable nonprofit organization that receives contributions, that would be revenue. And if there was a decline, that decline there would be how you demonstrate revenue decline.
That was gonna be the question I was going to pose to you folks. So
that's in the statute.
So donations, grant money, well, those two, donations and grant money, that would all, in your opinion, be considered revenue for that entity.
Yeah,
right?
I can't. I have a scroll feature on my computer, but I can't scroll through the 5,000 pages right now to find it.
And would
so generally all those types of revenues are all those types of income or sources of cash are reported on your revenue statement on your 990. So I would consider those revenue.
Let me go a little bit deeper into the weeds. So if you receive like those city small business grants, that like the $10,000 one, would that also be considered revenue?
Yeah. Okay. Yes. And those are actually taxable, considered taxable income for both GET and income tax purposes.
Okay. Next question I'll pose to Stacy regarding deductibility of expenses. What is the Hawaii State Department of Taxation's position for state taxes?
So I don't think the state has had a chance to catch up yet with considering the law hasn't passed yet.
Okay. Does idle 10K exemption apply to the first round? That was the one that Jeff sort of went in depth on, which is a somewhat equivocal, we think so, but with some hesitation. So that's.
But we have the next question, which if your P loan was already forgiven and the 10,000 EIDL advance was excluded, you don't get to go back and get that. The statute's pretty clear. Yeah.
Here's a question though. Can you go back and get the difference in the second time around? Can you? So there's a provision that says if you return money, then the first time around because you were too scared because the rules they were making were super scary at one point and they were all mad at Shake Shack, that you can get that loan again and a second loan. So that is included in this new law. So I have no idea what the answer to this question is, but I pose a question as to whether things like, your forgiveness was 10 less than it would have otherwise been. Can you then go and pick that up on a redo of a loan? I think the answer is probably no, but anyway. Okay. Next question, which is a good one. Inclusion of disability insurance. Does it apply to TDI or work comp premium payments? I think the three of us are confident that TDI would qualify, right?
Mm-hmm. Yeah.
Okay. What about work comp?
I'm gonna say right now, take those as your last payroll expenses, because they're government mandates to the extent they're government mandates, but the language is in there, and they don't really say only privately granted disability payments. But again, I'd try and get over 60% with everything else before relying on government mandated TDI or government mandated work comp.
It's going to show up in the rules, right?
Yeah.
There's going to be a rule that clarifies that at some point, just not yet. Next question is, with the reduction from 10 million to 2 million, will the automatic audit be changed? I have no idea. I don't think Jeff or Stacy do either. Next one is, does the one-page form apply to loans under 150 in both rounds? Can you two remind me, the current form it maxes out at 50? Is that?
Mm-hmm. Yeah.
Yeah.
Yes.
So current form is 50.
The simplified application form applies retroactively. So it applies to both rounds, Kip.
So the form that will be coming out for
Yes.
the simplified forgiveness process for loans under 150 should apply to both loans, provided you haven't already been forgiven on the fifth one.
That's section 307 on page 2055.
And they have, is this the one where they have 24 days to put this application together from passage of the forgiveness application? So I think, and again, it's like the first webinar, Jeff and Stacy, correct me if I'm wrong. From the passage of the new law, SBA has 24 days to get this one-page forgiveness application out. Is that right?
Yeah, and they may not require additional materials unless necessary to substantiate revenue loss requirements or satisfy relevant statutory or regulatory requirements. So they have some wiggle room.
Yeah, what's the first? I mean, with the CARES Act, they had 30 days to publish the final regs, but we're still waiting on that.
Yeah.
Okay. Are there provisions in this new package for simplifying forgiveness criteria on the first round of PPP? I think that one has been, you just answered yes.
Yeah.
And we've been waiting for First Hawaiian Bank to put up the forgiveness portal. So I guess what I would say to that is, our presumption is the banks are moving as fast as they can move, and they're done the best they can. They're also being somewhat cautious since the forgiveness rules and application forms and the new law, they seem to keep changing. So for example, that issue with the EIDL being deducted and then now not being deducted, like these things are just in constant change. And that kind of change, I think, makes the banks somewhat apprehensive about saying this is it, everything's clear, and now we're going to process everything. So
I think the banks are probably really happy with this legislation, because I know most of them lobbied really hard to include that simplified forgiveness process for loans under 150,000, because they just weren't equipped to be able to go through the forgiveness process with that volume of loans. Just so you know, I think the loans under 150,000 is about 87% of all PPP loans issued. So that was going to be really difficult for the banks to process.
Yeah, there's also quite a bit of liability protection for the banks in this new bill. That's really pretty substantial and explicit. So hopefully that will give the banks a great bit more of a deal of comfort, about going with simplified and about, giving forgiveness where it's due. Okay, how are we doing? 249. Let's answer one or two more. Will PPP2 also have Safe Harbor 1 and 2? And I'm presuming these are, I need to go back and remember how we labeled them, but it's things like you could not restore FTEs due to compliance with the shutdown orders. That would be one of them. Other one would be restored FTEs by certain dates, that sort of thing. We don't know the answer, but we think that it would be likely that similar exceptions would apply in here. Nothing so far has suggested that the new PPP is intended to be more harsh or more restrictive. So to the extent that there were exceptions to the reduction rules before, when the reduction rules get reclarified by the SBA, we think it's probably likely that the exceptions to those rules will also be re-upped.
But Congress gave the SBA and Treasury the right to decide what dates would apply. So we'll wait for SBA to say you need to compare, you need to bring the employment levels back up at the end of your covered period to February 2020 or January 2021.
Yeah.
We just don't know that.
Yep. The next question I saw was shuttered venue operator grants. I'm assuming this is relating to shuttered venue operator grants. Is it administered by SBA? I think the answer is yes. It looks like the way it's drafted is that it would be directly through SBA.
Yeah.
Is that right, Jeff? Okay.
Yeah. Yeah.
Okay. And then last, I think we'll just do this last question, which is which communities in Hawaii qualify as low income, and that relates to the EIDL qualifications. And I think the easiest way to do it is, I believe if you go on Senator Schatz's website, they have information about the updates to EIDL, and there's a hyperlink on their website to an interactive map that shows the communities in Hawaii that would be designated as low income. I think that's the easiest way to find that map. Okay, and I want to answer one very well, that's okay. It's getting to time. Any final thoughts or things you want to add, Stacy or Jeff? I'll take
No,
that
thank
as a
you.
no.
No, yeah,
Yeah.
nothing, yeah.
Merry
Okay.
Christmas.
Well,
Happy holidays.
Happy holidays to everyone. Thank you for joining us on 12 hours notice or whatever it is. And we'll keep trying to stay on top of this stuff, but hopefully everyone gets some rest, and happy holidays to you all. Take care.